1.
Hi, fellow investors. This is Joe Gruender, founder and CEO of InvestorsHelp.net. Today, I will be your moderator for this webinar, and I'll share some of my thoughts based on 30 years of experience in the financial markets. Excuse my voice for today. I do have a sore throat, but the show must go on. Welcome to our first Market Stock Talk webinar. Try to say that quickly. Market Stock Talk. It's a tongue twister. This webinar is the first of many weekly webinars that will be available to you each Friday after the market closes. To find this and future webinar videos, please go to youtube.com and search for Market Stock Talk. The purpose of our Market Stock Talk is to provide to you both current and specific information on the financial markets and also specific comments regarding individual stocks. So what more can you ask for, right? We feel that Market Stock Talk will be a benefit to you, whether you are looking to buy a leading stock or even short a leading stock. We are going to reveal to you low cost, low risk, and alternate entry points for the stocks we review and follow. Perhaps you're wondering, what's our intent for these webinars? We want to maximize our financial returns, and at the same time, we also want to minimize our risk. We hope that you learn with us and that you also profit as we publish future Stock Talk webinars. For today's webinar, we are fortunate in having David Grandy, CEO of All About Trends. You can see on this slide how to reach David Grandy. David will share his observations and thoughts about several individual stocks that will be of interest to you. David is also a contributor to Ford's and a regular guest on 2 nationally syndicated radio shows, Gary Kaltbaum's Investor's Edge and Winning on Wall Street. We are also very fortunate this evening in having with us Dennis Wilburn, President of Active Trend Trading. You can find that as it shows on the slide, activetrendtrading.com. Dennis has led the Bay Area Money Makers, what we refer to as the BAM Trading Group, here in Silicon Valley for many years. He provided training to several hundred traders throughout the San Francisco Bay Area. Dennis was also highlighted in the book How to Make Money in Stocks, Success Stories by IBD's Amy Smith. Dennis writes a bi-weekly newsletter called Art and Science of Active Trend Trading and hosts a weekly webinar called Midweek Market Sanity Check. Today, Dennis will be providing his perspectives on the financial markets and also his thoughts regarding some individual stocks. So let's begin with a review of the markets for this week. Dennis, are you ready to share your thoughts regarding the markets?
Yeah, Joe, I am. Let's get things going with a real quick market review. So as I sat there and reviewed the market at the close today, it was kind of an exciting close, especially if you like downside reversals, guys. Taking a real quick look at the S&P, I'm not going to basically get a lot into what's gone on this past week regarding the market because I'm a technical guy primarily, and I believe the charts themselves tell us a huge story about what's potentially going on in the market, especially, but I think that for each of the indices, we're starting to see a little bit of weakness and maybe a little bit of a turnover. We have to recognize that the bull market has been in effect for over 5 years now. It celebrated its 5th year anniversary a couple of weeks ago. And as we look at the charts on the S&P, I want to start pointing out something. We were starting to get some hints over here. This was a couple of weeks ago when I also study and am a certified candlestick technician. We're starting to get some candlesticks telling us here that the buyers just weren't rushing right in to buy up and bid up the market. And then this day here, when we get this first initial downside, when we first started getting the Russian-Ukraine issues going on. And then this week, what's very interesting is we get this downside reversal on the S&P, and we made a new high today, and then we proceeded just to reverse and almost sell off for the rest of the day. If you look at that on a weekly chart, what happened was last week in the S&P, we get a bearish engulfing pattern on the S&P for a weekly pattern, which is a sign of weakness. And then this week, we stay confined primarily within that bearish engulfing pattern. While the engulfing pattern itself doesn't tell us that we're going to, hugely sell off, it is a sign of weakness. Let's take a real quick look at the Nasdaq Composite. Okay, Nasdaq Composite, same type of thing, even maybe showing a little bit of additional weakness. I forgot to mention the S&P, as of the close today, is up only 1.9% for the year. The Nasdaq is up 2.4%. But again, we're starting to get a series of candlesticks at the high up here, at this resistance up here, that are showing that the market is experiencing some weakness in its progress to move higher. And these large candles, which are showing significant sell-offs, are clearly outnumbering on a daily chart, which is on the left-hand side of the screen, are clearly outnumbering the upside smaller candles. So it appears as if, and I do keep a momentum indicator, it does appear that the market in the Nasdaq, which is where a lot of the growth stocks are, is starting to roll over and lose some momentum. Over here on the weekly chart, I just want to highlight that what took place. Last week we have close to a bearish engulfing pattern. Today we get, or this week, went back up to the highs of that candle and sold off at the end of the week and closed the week at almost the bottom of its trading range. Not a real healthy indicator for the market itself. Are we going to go into a huge correction? We don't know. Is timing correct for a 10 to 15% correction? Possibly. We'll have to let the charts tell us what it's going to do next week. And finally, the other index that I track closely is the Russell. The Russell, and on the Russell, it's up 2.58%, so it's actually for the year. It's actually beating the Nasdaq, which is kind of an interesting. But again, here's where these small cap stocks hang out, where they live. And again, about the same time as the other markets started to top, the Russell, they started to show weakness. The Russell also started to show weakness, came back down to the 20, bounced back up, appears to have put in a lower high, and we'll see if it does in fact turn over for the rest of the week or next week and continue on to maybe the longer term trend on all of these, all the indices still remains up. But we'll see if we come down here and retest the 50, which is the yellow trend line. One other thing I will point out that really caught my eye in a review of this, the Russell, was that through about August of last year, the Russell was just following this trend channel all the way up. But in August, you can see the upward momentum and trend of the Russell started to slow down a little bit. Does this mean momentum was coming out? At least the forward progress was slowing some. Still went on for great gains from August up through earlier this month, but now is starting to show perhaps some signs of being tired and wanting to turn over. So Joe, that's all I have for the market themselves. I've got a couple of stocks that I'll cover after David does his part of the market stock talk. You're right, that is a tongue twister. And right now I will switch over and switch to David. 0.
Okay, thank you very much, Dennis. That was excellent analysis. And I'm going to go through now the charts of some leading stocks here, because that's what we look at to gauge the overall health of the market, because it is a market of stocks, and that's what we trade. So we are, as Dennis mentioned, we are under pressure, but we are in an overall uptrend. And in uptrending markets, the best pattern, really the only pattern you need to know, is what we call the pullback off highs pattern. This is when a stock that's in a clearly defined uptrend, like the markets, is moving up, but it doesn't just go straight up as much as we'd like that to happen. It instead goes up and then consolidates and then goes up again and consolidates, and it's kind of like a staircase, as William O'Neill, the founder of Investors Business Daily, highlights in the book that Dennis was featured in, How to Make Money in Stocks. Stocks typically move in a staircase. So these mini downtrends, these pullbacks, are what we're looking for in leading stocks as our buying opportunities, our low-risk buying opportunities, or opportunities to buy leading stocks at alternative entry points. So I'm going to go through some stocks that are forming those patterns. And the thing that we really look at, too, is to gauge the overall health of the market. Are we seeing more long side patterns, or are we seeing more short sell patterns? And right now, even though the market's under pressure right now, we're definitely seeing a lot more structure on the long side, and very little on the short side. Now that can obviously change, but that is the way things are right now. So the ideal pullback off highs setup is a stock that's in a confirmed uptrend above the 50-day moving average and is forming a nice, tight, orderly, low volume pullback to support, which is typically the 50-day moving average and or trend channel support. And I'll show you some examples of that. This is Palo Alto Networks, a great example of how and when to buy a leading stock versus buying it on a breakout and chasing it where you're vulnerable to a pullback. Instead, let it pull back and give you a low-risk buy point. As you can see here, there's two pink lines. The lower pink line is the first time that Palo Alto Networks pulled back after breaking out, and it pulled back very nicely, very orderly towards support at the green line and trend channel support, and then it exploded to the upside, and then it went up to trend channel resistance, pulled back again towards trend channel support, and blasted again to the upside. The blast higher, when it moves above the pink line, that is your trigger point. That's the place you get into it. So now let's look at some stocks that are setting up right now. Facebook, that looks very similar to the chart of Palo Alto Networks. We've had two pullbacks already within the overall uptrend channel. One of them, the most recent one, was on a gap up, right before earnings, which isn't really the safest place to buy, but it did pull back into earnings, which you could use as a forecast of, hey, the earnings could be pretty good. But right now, currently, you can see we're pulling back very nice, very tight, very orderly, above multiple areas of support here, above the 50-day moving average, and within an overall uptrend. So, and if you look down here at the bottom of the chart, the stochastics, the indication of how short-term overbought or short-term oversold a stock is, they're in the gutter, which is what we want to see. We want to see a stock that's short-term oversold because it clears the way for new buyers as it breaks above the pink line eventually. So it's real simple here. It's either going to continue to pull back, which makes our buy point lower, or it's going to eventually break above the pink line and trigger a trade. Or it could just break support, and therefore we don't do the trade. No break of the pink line to the upside, no trade. It's that simple. And then once it does break the pink line and we're in the trade, we're just going to manage the overall trend here and stay in that position as long as this uptrend remains intact. O'Reilly, this trigger today, unfortunately, it got caught up in the swoon into the close there and kind of came right back to where the buy point was. But it was looking really, really nice earlier. But you can see, again, very big gap up here on earnings, and then it pulled back to support, near where it had gapped up to, and then the 50-day moving average wasn't too far, and then today it broke up with some good volume behind it. So now from here we're going to look for follow through, and then if it closes below the blue line, that's our stop loss. But again, a very nice orderly pattern, great looking stock here. Tesla, the same thing. Big gap up on earnings, and now it's pulling back in a nice mini downtrend channel, but well above the 50-day moving average. Multiple areas of support here. It's just a matter of it clearing the pink line with conviction to the upside to trigger a trade here. Okay, so we talked about pullback off highs. In a downtrending market, or even a market that has weakness like we're seeing now, we'll soon start to see some short sell setups. And right now, like I said at the beginning of this, they're few and far between, but there are some out there. And for shorting stocks, it's the exact opposite of the pullback off highs pattern. It's called pullback off lows. Instead of a stock being in an uptrend, we're looking for stocks that are in downtrends that have pulled back off of their recent lows and risen up to areas of resistance, which again typically is the 50-day moving average. So here with Canadian Solar, we have a stock that formed a double top, broke through its overall trend line. So now we consider the stock to be in a downtrend, and now it is rallying back up towards the 50-day moving average, where if it's going to continue its downtrend, it should find resistance there. And then the place to trigger the short sell trade is the downside break of the pink line. So that's what we're looking for. Let me give you an example of one that broke today, MasterCard. You can see it again, very nice overall uptrend. Broke through the trend line, broke down underneath the 50-day, and now has formed a bearish rising wedge back up to resistance at the 50-day. And today it broke through that with some conviction. The volume levels today are a little bit goofy because it was quadruple expirations, but needless to say, everything you need to see is right there on the chart. So there was a lot of carnage today in some sectors that have been leading the market for quite some time. Biotech, medicals being one of them. And I'm going to show you AOXN. They're not there yet, but here, whenever you have a leading stock that breaks down and knifes through its 50-day and is starting to show signs of topping, that's when you really want to start looking for the short sell pattern to build. But it takes some time. It's not, you don't just go out and short something that breaks through the 50-day right away, because what's going to happen is people, investors and traders are, oh great, AOXN, I've been wanting to get in that for a long time, and now look, it's on sale, it's right near the 50-day, I have this perfect opportunity to buy it. So it'd be wise to expect people to try to get into this and to form a rising bearish wedge again, a snapback rally as people try to get into a stock at a discount. And then, so that's what we're going to want to see. We're going to want to see it form this wedge and then break down from there to trigger the short sell. So this stock, along with many others in the medical sectors, are in the very, very early stages of setting up. Maybe they'll do that. Maybe they won't. It's too early to tell, but they're definitely going to be on our radar for now. So that's about all I have. You can contact me, allabouttrends.net, David at allabouttrends.net. I welcome any phone calls or emails. I love talking about stocks and helping people be successful in the market, and I think that's about all I have.
Okay, David, thanks a lot. I'm going to switch back to my computer to show to my screen, just to show folks a couple of those stocks you were talking about that are of interest potentially to the downside. We don't really know, as you were saying, we don't know, what exactly is going to happen. Is the market going to continue to correct? And as you were saying on some of the ones you were looking at, is that especially for the bearish scenario is it's oftentimes a great idea to wait for things to get down below the 50-day moving average, which on my chart is the yellow line. My other moving averages that I use, are the purple one, which is my 20-day simple moving average, and my 8-day, which is the EMA. But a couple of ones that are of a little bit of interest to me, and I think that especially if a person who's an option trader can do fairly well, because I never short a stock, but if it has enough option liquidity, I will do options to the downside. And I was looking here at for a potential as the biotechs were getting pummeled today. We're getting some nice setups, and again, the charts were telling us that things were not all well in biotech land, as we see activists, which had basically fallen, come up, made a top on this what could almost be considered an exhaustion type gap, ran on up a little bit further, but now it's drawn a line in the sand with a lower high and a significantly high volume day to the downside, breaking back. It got up to the 20 and broke back down, and there's a potential of finding support there at the 200. But for the option trader, of course, you've got a nice little about an $8 move there. One of the other ones I thought was interesting, David and Joe, to the downside was even perhaps a stronger candidate was VRX. Again, very similar to the ALNX that you showed earlier, David. And the one thing that I'm interested in, that you're absolutely right. We may get a bounce here for a wedge back up, but we've got a lower high, and it's clearly got a nice floor right here about 135. And if we get a small wedge up and that 50-day moving average continues to provide now resistance rather than support, it's got some potential of running back down to either the 100, which is the blue line, and it could continue to correct from there, especially if biotechs are currently participating in a sector rotation. The institutions are going to be piling out of that quickly. What do you think about those picks, Dave?
Yeah, if you want to turn it over to my screen, I can show you a drawn-up chart of ACT that I have.
I can.
So like Dennis was saying, we would like to see ACT complete a little better pattern here, but there's two ways to short stocks. One is when a leading stock comes up and forms a double top, which ACT did not do. I mean, it may end up doing that in the long run, but what we really would like to see is a top here and a top here, and then a break of the pink line to the downside. This is a little bit not really completed of a pattern. The second way to short stocks is when it has already broken down the 50-day, and then it forms a snapback rally up to the 50-day and then breaks down from there. So it's a little bit premature right now for me, but it's definitely getting there, and or it has potential to set up that way. Let's put it that way.
Yeah, and David, the thing that and you can leave your screen up. The thing that I like about this pattern that ACT is putting in right now is the old definition of a downtrend, lower highs and lower lows. Well, it's put, for me at least, in the way that I like to trade, it's already put in one half of the equation. And so is it shortable now for me here? No, not really, unless I get a rebound, because as you saw on my charts, ACT, since it is still above the 50, I wouldn't want to take a move right now, except there is a support level at about 206. And so, again, for option trading, that would provide somebody a $5 to $6 move to the downside. So again, slightly different strategy, but again, looking
Right.
for that several day. And if it moves below that current level at 206 and then breaks that, then heck, you're looking at what, about 191, 192. So
Right.
I like that.
Yeah, so I mean, I just drew in a couple potential support levels here that it, probably will bounce from at some point because it's a strong stock and it's still technically, in an uptrend being, if you use the 50-day, I guess, if you use that definition. So, I mean, what I'd love to see here is for it to find support here and then come back up and form a double top. That would be perfect.
Yep.
That would be a much stronger signal to me that this thing's ready to roll over than right here.
And so, yep, and I agree with that, David. But I do like those what I call just kind of low volume wedge ups, where it's trying like heck to get back up to a high, but it just gassed out. So
Yep, exactly.
anyway, so let Joe, Dave, you ready to turn it back over to Joe?
Sure.
And let him finish us up. Okay, Joe.
Are you ready?
Okay, Joe, you're on.
Wow, thank you guys. Dennis and David, you shared some really good information there for all of us who's listening to our webinar or who will be seeing this videos in the future. It's interesting to me to see how the question is, are we really pulling back to support, or is this the beginning signs of a market rollover? We're going to find out in the next few weeks, I'm sure, but to me it tells us that's why it's important that we should always check the market conditions before we invest in individual stocks. There's the old adage that a rising tide will float all boats. Well, in the stock market, you could probably say that the market will affect as much as 80% of the individual stocks in the market. So what I would encourage you to do is to definitely check the financial market, in particular the market that you're trading in, before you make your purchase or even before you short a stock. Both David and Dennis shared some excellent thoughts and observations regarding individual stocks, and I personally like Facebook, and that O'Reilly Automotive is very interesting to me, so maybe we'll have to check into that this coming week. However, I do want to remind you that the information and the observations that all three of us, Dennis and David in particular, this is for informational purposes only. In other words, it's for your education, and we hope and we want to say it's very important to do your own due diligence, do your own research before you actually make a purchase and put your hard-earned money at risk. This video is going to be made available. Probably it'll be available Saturday. Since today is already, it's Friday evening, it should be available on youtube.com, and you can search for Market Stock Talk. And it'll be there. You can review it several times, glean as much information out of it as you can. So, in conclusion, I want to say thank you, Dennis, thank you, David, and thank you, everyone, for joining this webinar and also for checking out this video in the future. So, this is Joe Gruender saying so long for now.